We've got another year of 2016, mainly to exit out of the countries that we said we'd come out of. When I took over, we were in 37 countries. We're going to be back to somewhere around 13 or 14 countries. That's the shape that we think will be right for our customers, particularly in the UK and Ireland, but it's also right for, I think, where our strategic strengths of this business are. In three primary product areas, which is rates, FX, and in credit, including debt capital markets. And that's where our strategic strengths are, and that's the area we're staying in, and those are the areas that I think customers recognise us as having strength. The rest, we've moved away from.
The natural question, and we've touched on this before, which is, are you seeing corporate customers say, look, you can't give me full service, so I've got to go to HSBC, I've got to go to another institution to get the full gamut? Where are we in that? The likes of Shell, the likes of the oil producers that are customers?
The thing that's really important to understand is they are multi-banked anyway. I mean, they have a panel of banks. If you get to a
Well, are you losing less of the, are you losing more of the wallet?
Well, we are, because of the areas we've purposely come out of. So if you take some of the large companies, the fact that we've come out of global transaction servicing means that of course we're losing that share of the wallet. That will go to somebody else. But are we losing that share of wallet in the three core areas that I've talked about? The answer is no. Those are the big areas that they see our real strengths. The work in our corporate institutional bank primarily will be finished by the end of this year. On the structuring of the front end, the piece that faces customers will pretty much be done by the end of this year, which is a very, very good outcome given the amount of work.
John Cryan over at Deutsche Bank, I love this. I've got to actually read it out to you, which is, I mean, he derided bankers' bonuses. And you're right, I hear what you say about your own. But many people in the sector still believe they should be paid entrepreneurial wages for turning up to work with a salary and a pension, probably a healthcare scheme, and playing with other people's money. Do we, in banking, does the industry need to really look deeply at itself in terms of remuneration? Personally, I think that that's rather sanctimonious. John Cryan did quite well out of banking.
I think what you've got to realise, that the marketplace is changing dramatically. You've seen all of these companies you've been talking about changing, downsizing, and that will have, I think, an impact on remuneration long term. The thing for me, I've become very pragmatic quite quickly on these issues. You need the right people in the right jobs, and you need to pay them enough to actually get them to do the job. But the thing that's been really important for our business is to build a culture of this organisation that it is not as about the money, it's about doing the right thing.
But that's difficult in the environment, though, isn't it, Ross? And that you need to retain staff to get you through this reinvention, as it were, at RBS. You have to pay.
Well, that's why we've been paying, and that's why we've had to pay bonus structure. But that bonus structure for us is down dramatically from where it was 5 years ago, dramatically down, to the point where it's a much smaller part of our overall salary bill. So I think we're in pretty good shape now. The question is, how do you remunerate people for doing the right job, getting the right results, focusing on the customer needs, and getting the results for the overall business. And one has to be somewhat pragmatic about that.
We've seen the government chip away. They've sold a little bit. The press made a big meal out of it. They took a loss, etc. But the government position is still more than 70%. Their objective is to be a minority shareholder or out of RBS in this Parliament. And I suppose you've been in the seat now over 2 years. How realistic is that?
Yeah, I actually think it is realistic. Look, it's in their hands to sell the shares. My job is just to create a good bank so that they get a good asset to sell. And each quarter that goes by, you see us progressing towards the bank that we choose to be. And our strategy is, which is based here in the UK and the Republic mainly. And every quarter goes by, you see us taking off the balance sheet assets that won't be part of the go forward. That's happened faster than I think anybody has anticipated. We've strong concentration of people who are focusing on those areas, and they do an amazing job. And we've had a good market to do it in. So a lot of this is around timing, but also very good people. So I think you're seeing emerging a bank that we said we would become a lot quicker than people anticipated. But it's not easy work. There's a lot of change going on in this organisation.
To you, it matters what the Bank of England does. So talk me through your thinking as you look at the risk of the Fed and the return.
Well, first off, I think CEOs of banks have wrongly thought that interest rates would go up and based their businesses around the income that comes out from that. Since I've been in the job, my view has been don't take any account of any wins we get out of interest rates going up. Build the business as though we're at where we're at. I think the interest rates in the UK will stay low for longer.
How low is low for longer? Come on.
Well, I don't think they'll be moving in 2016. So we're building our business around the fact that they won't be moving, and if they do move, that's nice to see. But I think you've got to build your business around some of the, not the worst case scenarios, but the scenarios that don't leave you, hoping that something will happen. And that's what we've done with our planning of this business.